Welcome to the webinar series of Mehta and Mehta, Decoding Corporate Law with Mehta and Mehta. Welcome to all. Today's topic is insight into the valuation. Friends, insight into the valuation and register valuer. Valuation is such a crucial part for any corporate world because all your corporate action depends on the valuation. Valuation decide the strategy, structuring of the transaction, how to change the business and the hands of ownership and the unit, etc., etc. Earlier period, valuation was not so regulated in India, but by late, it has taken it's taking rather a journey of somehow structuring, regulating, and having standardization. It was there, but it is more becoming stringent now. There are different classes of assets which require valuation, which is very interesting. We know financial assets, that is shares, securities, debtors, etc. We know land building machinery, obvious. We know other assets, stock, trading, whatever it is. Then comes interesting is software. Valuation of software. I myself faced the same as an IP when I had to value the software of the company. It's a very complex thing as the person should be so expert with that asset valuation, the present market, past, current situation, the situation of the asset. Keep in mind that gold, silver, diamond, various other assets, intellectual property, brand, copyright, patent, various assets, and each asset has its own challenges when a person value it. And hence there are various guidelines under various acts. There are requirement of valuation under various acts, including Companies Act. Each one has their own requirement and own standardization and the eligibility of the registered value. There are differences in the Income Tax, Companies Act, Insolvency Law, FEMA, and other laws. So today we are covering so far possible different law and the valuation, but the stress also will be on the Companies Act. Always the people confuse that here the merchant banker will come, here the IBBI registered valuer can be appointed, or a chartered accountant can do the valuation. This clarification will be done today by our presenter, Mr. Akshar Mehta.
Akshar Patel.
Sorry, I made him Mehta. Sorry. Welcome, Akshar, for your presentation. Akshar is a member of ICSI and a law graduate from Mumbai University, and having experience in finance, accounts, compliance, and legal field. He is also a chartered accountant. He has an enriching experience in the field of auditing, taxation, corporate law, governance, legal principle, due diligence, public, business restructuring, advisory, SEBI, and more than 12 years extensive experience in the compliance, advisory, financial domain. And he has a involved in various strategies. Welcome, Akshar Patel.
Thank you, ma'am.
We have with us today's our panelist, Mr. Abhishek Joshi. Mr. Abhishek Joshi is Director of JC Valuer Private Limited and Advisors Private Limited with over 14 years of experience in valuation. As a registered valuer under Companies Act, Mr. Abhishek has vast expertise and experience in the field of real estate valuation, supported by master's degree in the field of master's degree in the valuation real estate from Shivaji University. He is a chartered engineer in the civil engineering division, further enhancing his qualification in the real estate sector. Throughout his career, he has been deeply involved in valuation practices, having served as Managing Director of JC Valuers and Advisors Private Limited since January 2010. His extensive experience extend to his role as a government registered valuer at register valuer at Joshi Consultant, where he worked over 12 years until November 21. He has contributed in the field of teaching as a faculty member at various forums. He has strong academic background and hands-on experience on valuation and civil engineering. Welcome, Mr. Abhishek. We'll look forward to share your experience and gain from that. Thanks for your time.
Thank you, Dipti.
We have with us our own panelist and moderator, Mr. Bala, moderator, and Sudhakar, our chief consultant, Mehta and Mehta. I'll request Mr. Abhishek to say a few words on the topic, and then Sudhakar and Bala, and we can, Akshar, you can start the presentation. Over to Mr. Abhishek. Thank you.
Yeah, so today Akshar will be mainly covering what is the need of valuer, and there are various aspects where generally people get confused that which type of valuer should be utilized, or valuation services has to be obtained from which category of value. So as we know, there are mainly three categories of valuers, that is immovable assets, which are done by land and building valuer, movable assets, which are covered under plant and machinery, and securities and financial assets. So generally done by the chartered accountant. So Akshar will be mainly covering the eligibility criteria of how to become a valuer, which category of valuer you can opt for, what is the process of valuation. So once the registration of valuation or valuer is done, how to value the properties, which kind of properties, what are the methods of valuation, say income approach, market approach, and cost approach. So we need to understand that these three are the basic methods or the approaches to valuation, which are by and large used for all the categories of valuation, be it land and building, be it plant and machinery, or be it securities and financial assets. SFA valuer uses the discounted cash flows, which will be mainly covered by Akshay in his presentation. So all the best, Akshar, for your presentation.
Yeah, thank you, sir.
Sudhakar, would you like to say a few words? And
Yeah. Good morning, everyone. In fact, I will not talk about the legal aspects of the registered values, because I have an opportunity to go through the presentation of Akshar. In fact, one of the finest presentations I came across in the recent past. So he has covered almost all the related aspects. But one or two things I would like to say about the valuation is that, according to me, valuation is a science, it is an art. One needs to develop that. One should have an eye and experience to value anything. It is not only a land or a plant and machinery or a financial related assets, but anything if we have to value, we need to have an eye for that, and we need to have an experience for that. Because valuation is a perception. I can give a small anecdote that one disciple who has completed his curriculum, and before leaving the Gurukul, he asked his guru that, I had completed 5 years of your teachings. So what is my value? The guru asked him, he has given him a stone, and he asked him to go and find out the value of that from the market, but not to sell it to anybody. Go to different people and ask the value of that particular stone. First, that say a disciple went to the vegetable vendor. He asked him, can you please let me know the value of the stone. The vegetable vendor said he just saw the stone and he said that I can give you 1 kilo of potatoes or onions, whatever you feel like. Then he went to a fruit vendor. The fruit vendor offered 2 kilos of apples or something like that. Then the disciple, he went to a jeweler. There was a jewelry shop, so he went to that jeweler. The jeweler had saw the stone, and he seems to be that a bit valuable. So he said, I can offer you a gold chain of 10 grams. Then the disciple went further down. He went to an antique shop. That antique person has saw that, and he realized that this is a precious stone. He offered him 5 lakh rupees. Then the disciple went further down to a precious stones shop. There the merchant saw that and he said, from where you got this stone, I don't know. But nobody can value this stone. This is the rarest of the rarest one. It is a highly precious stone and I can't value this. The disciple came back to the guru and he told whatever has happened. The teachings from this anecdote is that it is the same stone valued by 5 people according to their own perception, according to their own experience. So whenever we talk about valuations, this is more important. Why I'm telling this anecdote is especially for the participants to realize that most of the time the company secretaries tells me that, sir, I have qualified the valuation exam. I'm a registered valuer now. By merely having a qualification, you will not become a registered valuer. You need to have that experience. In case any of the company secretaries who are the participants, they want to become the registered valuers after attaining the qualification, after getting it registered, please do work with a registered valuer at least for 2-3 years. Gain the experience, understand the nuances of valuation. The reason being, if you made a wrong valuation, it has its repercussions. That is very, very important. The same point of time when you are appointed as a registered valuer, there will be a lot of pressure on you to value a particular asset in a particular way for a particular value. If you walk down with the pressure of the client, and if you get into the territory of any kind of unethical practices, you will be held responsible under 448, which is a very serious offense, and criminal consequences are attached to that. So my humble submission and advice to all of you is that if you want to become a real registered valuer and prove your mettle for that, need to gain experience apart from the qualification. So I give a pause here.
Okay. Akshar, you can start. Okay. Welcome.
Yeah, okay. So, good morning, everyone. So, in today's presentation, we will be discussing about the register valuer, the how to become a register valuer, what's the importance of the valuer, and how the different act require the valuation differently, what are the penalty, what is the procedure, which are the various method used to value a different kind of assets, what are the content that needs to be mentioned in the valuation report, and which standard needs to be followed when we prepare the valuation report, and few of the case studies where the valuation report played a very crucial role in making the decisions. So introducing the register valuer. So who can be a register valuer? So professional who are authorized under section 247 of the Companies Act to determine the fair value of the business assets and liabilities. So the section 247 gives the authorization and has given a reference to a valuation rule 2017, and in which they have mentioned the eligibility criteria, registration process, code of conduct for the valuer. And the registered valuer must be accredited to a insolvency and bankruptcy board of India. That's the IBBI, who is the ultimate authority who look after the overall RVO, who is a registered valuer organization, and the person registered valuers. So legally it is authorized by section 247, who has first time who mentioned the various reports needs to be taken from the registered valuer. So next slide. Yeah. So valuation report, this is just an overview of the valuation rule. It is divided into 6 chapter and 4 annexures. In preliminary chapter, it gives some definitions and other overview. Then chapter 2 gives the eligibility criteria, qualification, examination process, and registration. Chapter 3 provides a recognition of valuer like ICSI, ICAI, CMA, who has taken they have become a registered valuer organization. Then cancellation, suspension provision in chapter 4, valuation standards and committee, constitution of committee, who are the member of the valuation committee, that's given, and miscellaneous provision and penalties given in the chapter 6. Annexure gives various formats of the for application, form, certification, bylaws that need to be adopted by the RVOs, and qualification and specified discipline required for the registered valuers. Next. Yeah. So why the valuation rules needs to be introduced and why it was required. If we see the logical reasoning, so before 2017, the rules came first time in 2017. Before that, there was no specified or standard rules to make the valuation. Anyone was adopting any valuation and getting the certificate from the different professionals by using a different method, different assumptions. So there was no standardization of the valuation report. So say if somebody is giving a valuation of some property at say 100 rupees, so same other valuer can give it to 150 or 200 because there was no standard specified that time. And valuation report format is also was a different. So it becomes difficult to take a proper decision and judgment, and chances of fraud and misinterpretation increase. So government came with valuation rules in 2018, and they introduced the valuation rule 2017 by giving some process and methodology to be used and bylaws, code of conduct to a valuer, and made it standardized so that all valuation report can become a comparable and it can be controlled, like, and to reduce the fraud and other cases. Next. So we already discussed that why the valuation rules and regulations are required. So to it ensure the transparency and accuracy. So it provides a true reflection of the asset value, which is critical for fair business transaction. It prevents misrepresentation, fraud, ensuring the stakeholder receive the reliable information. The rationale behind the rule is to standardize the thing, to control by a regulatory compliances, and to gain the investor confidence. So people can rely on the valuation report while making the investment decision or any takeover decision or anything, because it is very much complied and controlled by the legal framework, which previously it was not. Next. So there are various impact of valuation in different laws, like why the valuation is required. So under Income Tax Act, they have given the valuation to prevent the tax evasion. For example, if somebody take the valuation report from valuer, which shows a lesser value than the fair market value, to evade the taxation. So income tax made it mandatory to take a valuation report for few kind of asset, like when there is a issue of shares at a premium, when there is a slum sale, when the as a group of the assets are sold one go, that time also different valuation is required for the each kind of asset given in that. And when there is a transfer of unquoted shares uh, between two shareholders, that time also there should be a fair value to save the tax. So income tax sees the valuation from tax prevention and impact. Companies Act also give the reference to valuation report while issuing a preference shares or merger and acquisition, and the liquidation also. It ensures the transparency, fair treatment to our shareholders, and integrity in the corporate actions. So these are the two act which gives the importance of the register valuer. Next. Also the RBI and stamp duty. RBI has also given a emphasis on the valuation report while making the FDI or ODI. Whenever we invest in outside the country, that time also RBI monitors that where we are investing the fund at a proper value, and when the funding is coming to India, that's the FDI. That time also we need to give a valuation report when issuing the shares. This is just to prevent the money laundering activities and forex transaction, and to prevent the inflow and outflow of the foreign exchange for the country. So RBI also mandates the register values importance and stamp duty. Sometimes when there is a immovable property transfer, that time to avoid the stamp duty, people may value the property at lower rate or something. So the stamp duty department, the local department also ensures that the assets is valued properly. And if it is valued properly, it can reduce the legal disputes between the companies along with the various departments. So this is the very the value register valuation of the assets is very important to safeguard the corporate or company from the various acts, because they have a uh, like they have a power authority to determine whether it is proper value asset is valued properly or not. So that's the importance of the valuation across the various laws. Next. So if we see the legal framework, the overall valuation is valuer is important to provide the valuation report in case of insolvency and bankruptcy code under RBI guidelines, under SEBI regulation. Also, when there is a IPO or right issue, that time also SEBI requires a value a report from the valuer, even for the ESOP valuation. And under the Companies Act, there are various sections where the Act mention that report of the valuation has to be taken from the registered valuer. Next. So there are three types of valuer which is given in the valuation rule. First is the valuer for the securities or financial asset. Second is the valuer for land and building. Third is for the valuer for the plant and machinery. So value for security and financial assets like shares, bonds, derivative. So professionals who are qualified with accounting and finance background, they can apply and they can get themselves as a registered valuer by following the examination and procedure given in the act. They have also mentioned the process for the valuer for the land and building and plant and machinery. So these are the things. These are the three kind of valuer who do the valuation for the different kinds of assets. Abhishek Joshi has already explained all these three, that land and building and plant and machinery as a valuer is done by the chartered engineer and different fraternity people who are expert in those area. Yeah. So Abhishek ji, if you want to give some lights on land and building and plant and machinery valuation, you can.
Mr.
Abhishek is on mute. Yeah.
Yeah. Mm.
So, like, how do the valuation of land, building, and plant and machinery takes place? That's
Okay, so mainly, as you all of know, land building and plant machinery comes under the fixed asset category. Okay, these both the things are covered in fixed assets. First and foremost, the only appreciating asset in your balance sheets is considered as land, uh, unless it is leasehold land. So freehold land, mm, which is generally in your balance sheet considered at historical costs. But nowadays, if you have to present your company and its balance sheet, many of the companies are getting the fair market valuations done as per IFRS and recent amendments in the Act in days. So, first of all, in case of land and building, in all the fixed asset valuations, physical inspection and a verification of assets is very important. So, asset has to be there. Many of the cases we come across that assets are misplaced. It happens mainly in machinery section. So machineries themselves are not present at the site. So it is very valuer has to be very diligent. You just have to act as a CID officer sometimes, that how does it happen, where are the assets. So you have to be very careful and vicious that uh, while inspecting the assets. So land valuation is done by the market approach, which will be covered in your further segments. So based on the market comparables in the nearby area. Buildings are valued at by depreciated replacement cost method. So valuation of land and building is a combination of cost approach and market approach. Okay, if the assets are income generating or have been rented during the site inspection, or they have potential of giving it on lease or rent, those land and building also can be values of those assets can be estimated by income approach. There are various complex methods which need not be covered right now by me. In case of machinery, the valuation is mainly done by depreciated replacement cost method. But most important factor in terms of machinery nowadays has become is the term obsolescence. So obsolescence of a machinery can lead you anywhere. For example, if you have a machine and cost of that machine is say 10 crores, and that machine prepares CDs and floppies. So today no one will buy that machine. So you have to understand the difference between cost, price, and value. So cost is the manufacturing cost required to create that asset. Price is after adding the some amount of profit on that cost, and the value is actual utility of that asset in the mind of the purchaser. Okay, so this market is mainly driven by purely demand and supply, and all these factors, even legal factors of the assets, legal compliances also have to be considered while doing the all these types of valuations.
I think, sir, you can start now.
Next slide. Next slide. Yeah. So, there is. So there are some. There are few organizations like who are registered under the IBBI. They are themselves registered themselves as a registered valuer organization. So like ICAI, ICSI, CMA, then Association of Registered Valuer Analysis. So these organizations are organizations who have registered themselves with the IBBI and they have become a organization who can give the training to a qualified people and then can grant a registered valuation certificate. After that, those person can perform the valuation of those assets under which they have taken the registered valuation certificate. Next. So, value chapter 4 says the establish it. The main object of the chapter 4 is establish a consistent valuation standard, uniformity, transparency, and the accuracy. So key provisions say the registered valuer must follow the valuation standard notified by the central government. Currently, there are no valuation standards notified by the government today. So we'll have to follow the valuation standard notified by the International Valuation Standard Council or the ICAI, Institute of Chartered Accountants of India. And whenever the valuer prepare the valuation report, they must adhere to all these standards issued by these organizations, so that the uniformity can be maintained and it can give the fair value of the asset. Next. So ICAI has given the following 8 standards according to which when we prepare the valuation report, we have to adhere to the standard and we have to take the assumptions, valuation method, the principle on business valuation, the basis on which we prepare the valuation should adhere with these standards issued by the ICAI. So standard 101 defines the principle of valuation, like the establish the key terminology and general principle to ensure the clarity and consistency in the valuation practice. 102 says about the valuation basis, like details different valuation base such as the fair value, market value, investment value, and guiding when and how it should be applied. 103 says about the valuation approach and method. So it describes the income, market, and cost approaches, outline when to use which method and for which asset. Standard 201 says about the scope of work, analysis, and evaluation. It defines how to establish the scope of work for the valuation. What area needs to be covered, what things you can value or what you cannot consider for the valuation purpose. 202 says about the reporting. It gives a proper format and content. The report, which should what should be covered in the report, because people who are taking the decision basis on the report. So as per the standard, we have to mention all the facts, assumptions on what basis the report has been prepared. So that's given into standard 202. Standard 301 says about the business valuation. It provides a guideline to value the business by different method and factors. 302 talks about the intangible asset, like patent, trademark, what basis to be done, what assumptions that you can take, what are the discounting factor to be used when you value the intangible assets. 303 tells about the financial instrument, like valuing the financial instrument include derivatives, bond, and complex financial products. So these are the standards that we need to follow when we prepare the valuation report. These are the issued by the Institute of Chartered Account of India. It's not given under the Valuation Rule 2017. Next. Yeah. So Rule 2 of the Act give about the various definition, like asset class, certificate of registration, valuer, then what is the partnership. So it gives about the different definitions for the under the valuation rules. Next slide. Rule 3 mentioned the eligibility of the registered valuer. So who can become a registered valuer? So registered valuer has to be a member of the any RVO, that's a registered valuer organization that we discuss, maybe a CSI, CSI, ICAI, CMA, or any other registered valuer organization. They have to pass the examination, which is mentioned in the rule, within 3 years from the completion of their training. They should possess the proper qualification given in the act, and it should be a minor. These are the basic eligibility criteria that is given in the rule 3. Next. Rule 4 provide the qualification and experience. So postgraduate in specific disciplines, like for valuation to getting into to become a registered valuer for the securities, you need to be either qualified CA, CS, or MBA in finance field with the experience of 3 years. And for to become a registered valuer under for land, building, and plant and machinery, somewhere they have mentioned that experience of 5 years is required. And specific discipline shall mean that specific discipline which is relevant for the valuation of an asset class for which the registration as a valuer or recognition as a registered valuer organization is sought to be. So
Ashar, I have one doubt.
Yeah.
When you say, land and building, plant and machinery, the specific experience, etc., and other thing and all, do you mean to say same valuer cannot value all the classes of assets,
No,
or they
cannot.
will be specialized only valuing certain classes of assets?
No, if I am a chartered accountant, unless and until I finish the valuation course under the valuation of land and building, but
Yeah.
then only I can do. But they have mentioned that you should have either you should be a chartered engineer or you should have some scientific background related to architecture. Then only I can apply for that exam also. Abhishek ji can give a proper
Yes.
light on that.
Yes. Presently, for the becoming a registered valuer, see, I have done my civil engineering in 2009. I have completed it. Then I completed my MBA finance. So I am eligible to be a valuer for both the financial assets and land and building. If I do masters in valuation in plant and machinery, and I get additional experience of 3 years by working with some plant and machinery valuer, I'll be eligible to become valuer for that asset as well. So according to me, 3 or 4 of persons in India are registered for all the three asset classes under Companies Act.
That means I have another question comes into my mind. Correct
Yeah.
me if I'm wrong.
Yeah.
Because what happens is in many companies, in the balance sheet, if you see, especially I'm coming to the investment companies and also
Yeah.
even the other companies, where the non-current assets, that means the people who are making the investment in the company, they make the investment not only in the property, they also make in the equity instrument, they make the preference share, they also make a mutual fund, they also make the debenture and etc. And also they make the other non-current investments also. The land and building also. If such is the case, if they want to actually value, because on the ongoing basis and every year, they'll have to make a disclosure about the investment. They'll have to talk about the investment value, they'll have to talk the diminution, they'll have to talk about the market value, they'll have to count the other things, all those things. So in which case, the company needs to approach a different valuer for getting the class of asset valued. That means company need to go for 2-3 valuers separately, one for plant and machinery, one for land and building, and one for the instruments, etc.
So if a company is getting valuation done for the company itself, company must appoint the valuers who are registered under 3 different asset classes. Or there are some RVOs, RVEs, registered valuer entities. Just hold on. Registered valuer entities, as I have my registered valuer entity in the name of Intelligence AGA Advisors LLP. So in which I am a partner. I have another valuer who is partner for who is registered under plant and machinery, and we have a chartered accountant who is registered under securities and financial assets. So we have registered our entity with IBBI as a valuer. So it is a registered valuer entity. So that company can appoint a registered valuer entity to get the valuation of all the 3 asset classes. Or they can appoint 3 different individual values as well.
Okay, so that means what you are saying is, apart from the individual, there will be a registered valuers firm who will have the different classes of valuers.
Yes. So,
the company can actually select those such firm, so that the firm can appoint 2-3 valuers, they can consolidate the report, the firm can provide one report. Am I correct?
No, the firm will not appoint the values. The company has to appoint that firm itself, who has all the 3 asset classes as values.
Okay.
Okay, and that company, for example, my company will, if you appoint me with the valuation done for a specific company and their current and fixed assets, you can appoint my company directly, and we'll get the valuation. And so I appoint someone else.
Yeah, and Mr. Bala, you rightly said that for valuation of business, they can give a consolidated because they have different kind of valuers with them. It's like you in that way. But as I mentioned in my starting point only, that valuation of gold, diamond, jewelry. Again, there are 3 kinds of valuer, like engineers. As on today, engineers, then civil engineer or machinery and all that, then financial valuer for securities and debtors, and then we have for land and building and machinery and all. But we have a variety kind of assets, as I mentioned, software. So here it can be done by financial valuer, but then we have to check if we want a good valuation, the person who has that kind of experience or knowledge in that industry.
Right.
So suppose for gold, in one of the IBC cases of the gold was worth of huge crores. So in addition to financial asset valuer, the RP has appointed gold valuer with the proper certification as well, so that proper valuation done. The same way diamond, same way art. Now art collection, how you will value? It's a different ball game. So here you require, again, in addition to that, better as a company or whatever, as a purchaser or a seller, you have to get it valued so that it cannot be questioned. That is the actually point I wanted. You can add, Mr. Abhishek, your experience on that.
Yes. So I have during a valuation, IBC code allows a valuer to appoint an expert. So we had come across a valuation where in balance sheets there were paintings painted by some artist. They were valued at 65 crores in their balance sheets. So we were not sure whether this is manipulation, this is fake, or and if we see those paintings, we'll feel that I don't buy this painting for 500 rupees as well. In
Right.
auction, those paintings were sold at 90 crores. So we don't have that artistic नजरिया हमारे पास नहीं है शायद. So those valuers understand the art.
Right.
They might not be valuers, but as an artist, they can complement us during our valuation. So if we are valuing the software, in that also, a software engineer tells us that which technology, which code has been used, is that code latest code, or the technology. So if we used to know HTML, C++, Visual Basics, VB, then Java, then .NET, some other, but there are various new technologies like Pythons and all the artificial intelligence tools are coming in, and it is becoming very easy to prepare the softwares now. So there is wide range, and manipulation can be done by the clients who want to adjust the value. So client always tells the positives and or negatives, what value he wants to achieve. So if you are getting a valuation for liquidation, client will tell all the negativities of that property. If the same property is being valued to get the financial loan, client will tell you all the positives of the same property on the next day. So you have to be vigilant, you have to be unbiased, you have to consider the markets, demand and supply.
Abhishek,
Sorry, Bala, go ahead.
Abhishek, that means after listening to you, it appears to me the company wants to achieve certain particular valuation in their mind. If they appoint a valuer, if they are not satisfied with this valuer and valuation, can they go to another valuer and
yes,
get
of course.
done?
Yes, of course, they do that.
When they do that, then both the valuers may not agree together.
Yeah.
So which will be taken as correct? Which will be you'll be taking it, or you'll be averaging it out?
See, the appointing authority. See, if I am a company and I have to get the maximum valuation done, I'll see which valuer is giving me the maximum valuation in minimum fees. Okay, and that report I will obtain. But for example, if a shrewd and strict insolvency professional like Dipti appoints two valuers, she will always be very particular while providing the data. It has to be also checked where both the valuers are getting the same data. In financial assets, the data which comes from the company, that itself is manipulated many of the times. So as I mentioned during the introduction, you have to behave like a CID or CBI inspector while preparing the reports and getting the data, analyzing the data. And as per the law, it is permissible that the difference between two values is 25%. Earlier it was 15%, but recently, not recently, around 7 months ago, there is new update that the difference in values between two valuer opinions can vary up to 25%. And if the difference is more than that, the appointing authority has the right to appoint third valuer.
My God.
Under IBC, compulsory to appoint then third valuer and get third valuation. So you have to be very vigilant and be aware that how valuer are speaking, how the data is provided. This is under IBC, but different thing is there. But that is very crucial. What data is given, what information is given to valuer. And you rightly said, Mr. Bala, that it is appointing authority like auditor is company only who wants valuation. Like when you appoint like auditor, or secretarial auditor. The same way, they are also one of the professional which company appoint. But how genuinely it can be done, it's different. Yeah, Sudha.
In fact, Deepthi, what I was trying to say, if you remember in the beginning itself, I said that in the anecdote also what I have given, valuation is a perception. Okay, and it is an art as well as a science also. And also it depends upon the person's need. As though it is demand and supply may not determine the valuation. Demand and supply only push the valuation either to high or low, but demand and supply will never demarcate the right valuation. Right valuation can be demarcated only at the right person, and that is the reason actually what I said was there will be definitely a pressure on the valuer to value the product for a particular value. So it is for the valuer to be unbiased. Otherwise, what will happen is there is a risk that he will get under the Companies Act liable under Section 488, okay, which is virtually equivalent to a fraud. And
Absolutely.
it is a non-compoundable offense also. At the same point of time, if I have to engage a valuer, it also depends. Say, for example, I am just getting my assets revalued for the purpose of bringing the true and fair view in my balance sheet. That doesn't mean so I have to engage a valuer who got a reputation. To answer the Bala's question is that one valuer may give one value, another valuer may give another value. It is just like credit rating agencies. What will happen? Ultimately, you have to use whatever the valuation you would like. I can get my assets valued by two different valuers. May give it a low and one may give high. It is up to me for what purpose I am using it. At the end of the day, I should be able to also justify and establish the valuation what has been given by the valuer. If he is giving a wrong valuation, he will lose his image and reputation in the market. That's how it determines according to me. So
And
valuation is not a simple matter. It is, and similarly, the valuation for the purpose of insolvency proceedings is entirely different, or getting my assets revalued for the purpose of bringing the true value of my my assets in my balance sheet. I will not be selling it out. I'm going to only getting it revalued. Whether it is my land or whether it is my plant and machinery or whether it is my other assets. As Abhishek has rightly mentioned, suppose a painting which is there, that painting is 90 crores or 9 lakhs. It all depends upon the person who got the experience and expertise to value that. That's what I told in my anecdote, the stone. One fellow offered 1 kilo of potatoes, whereas the other person said, I cannot value this stone at all because it is such a precious stone. He said that I don't have that kind of expertise. Okay, yeah.
yeah, and it is
So-
our valuer is governed by the regulation, different regulation, and under IBC they are taken left and right. So it's not easy and it's very subjective depending on various permutation combinations. So they have to be very careful under Companies Act, Income Tax Act. Because company will say this valuer report is there. So they
Correct.
are under various pressures and they have to be very vigilant with the proper supporting. I think the Aksar is covering that portion also. Okay.
Deepthi,
And you
then
have to understand, you have to always keep in mind that value is always an estimate.
Yes.
No valuer in the world can give exact same value. So there is no accurate value term in any of the books. There is no
Abhishek.
accuracy because valuation itself is an estimate. But
Right.
price is a fact. So if I and Akshar are dealing, so according to Akshar, if I have to purchase a property of Akshar and he is saying that I have to sell this property at 1 crore, I am saying I have to, for me, the value of that property is 80 lakhs, but the deal gets closed at say 90 lakhs. So 90 lakhs becomes fact and it becomes price. When it is traded, then it becomes price. Till then, it is always a value. For Akshar, the value of property is 1 crore. He's absolutely right on his terms. For me, I am also absolutely right because I feel the value of the property is 80 lakhs. So value is an estimate and price is a fact. Yes.
Abhishek,
But-
one more thing that comes into the mind when you are talking about appointing the two different valuer.
Yeah.
Then what about the time difference? Because the problem is that one of the valuer would have given the information based on the particular
Yeah,
time
so
difference.
value
Now the
is
next
Yeah,
Yeah.
value is always given on a specific date. So in case of insolvency, it is date of commencement of insolvency proceedings. Okay. In case of liquidation, it is different date. For in case of taxation purpose, say for capital gain tax, I'm valuing a property as of 1st April 2001. For and if even if the valuation is being carried out, say for a loan purpose or banking purpose, I value a property say in today, so 26th of October. You value the same property on 15th of November. So that does not make a huge difference in value, and that should not make. It's not like a stock market which is very much fluctuating. So. mm I don't think there is much difference in the time period of say 6 to 10 months, 6 to 9 months.
Oh, when it comes to the property, the real estate market is so much fluctuating like anything. So in which case the time difference will definitely make a thing, no? Because when you have a valuation done on a particular date.
Now, Mr. Bala, you have to
Yeah.
compare apple to apple. So that's why when you compare, like in IBC, they appoint two valuers at a time, and then they take out average in IBC. In other
Okay.
cases, you can compare apple to apple, and exactly same information. If two valuer give different valuation, then you can compare. But the information is different, you can't compare. Okay.
Yeah. Go ahead, Asher.
Yeah. Okay. So rule 5 is specify about the valuation examination. So before appearing for the examination, the candidate have to complete the 50 hours educational training from the one of the RVO. The separate syllabus for each stream of valuation is provided by the IBBI, and syllabus format and frequency of examination is also published on the IBBI's website. Individual who passes the valuation exam shall receive the acknowledgement, and then he can, after getting the certificate from the RVO, from where they have given they have cleared the exams, then they can start the valuation of the assets. So that's provided in the rule 5.
And under income tax, you are covering ahead. This is under IBC, but under income tax or other FEMA.
That we have covered in previous slide only. So initially,
Okay.
yeah. Next slide.
Who can do? Who can do means eligibility?
Means to be a
Under
registered
income tax for FEMA and all.
any registered valuer under the specified classes can perform the registered valuation in all the act, maybe in the FEMA or income tax. So if I am a registered valuer for the securities, and then I can value the shares as per Income Tax Act, RBI, and Companies Act. So there is no
No,
specific.
but under IBBI, I get a valuation certificate. Then I can do the income tax, FEMA, and everywhere.
Yes,
Okay.
because you are a registered valuer.
Okay, fine.
Yeah. Next slide. Next slide. So rule 6 says about the fees that needs to be paid for the application to apply for the registration. And for individual, it's 5,000 rupees non-refundable, and for partnership, it's a 10,000. So after after you enroll for the examination, you have to complete the 50 hours core training under the various act. So under the training, you will have to learn about the investment strategy, investment shares, market detail, then some economic laws, SEBI, and all other act. And then you have to appear for the exam, and then you can get the certification. Next. Uh, they have given some condition from the registration that those person who are eligible as per rule 3 and 4 can get themselves registered. They have to comply the bylaws, not to conduct value for other class. And whenever they transfer themselves from one RVO to another valuation, then they have to take the port application from the previous RVO. They have to maintain the record for the 3 year for which they have issued the valuation certificate to different companies. They have to comply with the code of conduct provided by the each RVO. So IBBI has given a freedom to the RVOs to make their own bylaws. Like they can add something. The standard they have provided, but however they have rights to add some additional regulations also for their registered valuer for that IBO. Then partner, if the partnership firm is signing the report, then he has to be a member of the registered valuer. Company and director who signs are they have to sign who signs are reliable jointly and severally responsible for the report. Next, conduct of the valuation. So the registered valuer shall conduct a valuation as per the valuation standard as provided. Currently it's the ICAI who has provided the valuation standard. Uh, uh, and the registered valuer may obtain the input for his valuation report or get separate valuation for any asset class of conduct for another registered valuer in which he has to mention in his report. For example, if I am when it comes to a book value of the asset under Income Tax Act, when we do a share transfer for the unquoted equity shares. So if the company's balance sheet has given some land, building, or some jewelry, then for that purpose I have to take a valuation report for those assets separately from the another registered valuer, and then the that has to be considered for the valuation of the company for the shares. So there are chances that we have to rely on some other valuer's report to ascertain the value of those assets. So then I have to mention in my report that I have relied on the valuation report of somebody else for this asset valuation. So Rule 8 mentions the pointers to be covered in the valuation report. So background information. Whenever we do issue a valuation certificate or report, we have to mention the background of the asset, companies, the purpose for the valuation. Like this, the valuation report is issued for the say private placement or for the share transfer or NCD or CCD. The name of the valuer needs to be mentioned. Disclosure, there is no conflict of interest between the company and the valuer. Appointment date, valuation date, data on which the valuation report has been prepared. We have for some shares valuation, like we mentioned that we have relied on the data for the audited financial and provisional financial provided till date, so that needs to be maintained. Source of information, like valuation report requires some assumptions to be taken, like we have to take the assumption of a discounting factor, risk free return, the beta of the company, risk and other things. Then we have to mention those as well, that from what reliable sources that assumption has been taken and the valuation has been arrived. uh, Steps and procedure, like which method we have used, is whether it is a DCF or market approach, discounted cash flow, that needs to be maintained, that needs to be mentioned in the report. Major influencing factor, like I said, the discounting factor or market risk, beta, like risk of the company, risk of the similar entity, comparative of the similar entity, that needs to be mentioned. And other limitation, that we have relied on the whatever documented information, the financial data provided by the company, and the report is based on that. So these all things are very critical for the valuation report, because the person who is referring needs to know that on what ground and what data this report has been made. So they can also independently do their working from those data when they have to evaluate the valuation of the asset. Next. So Rule 12 says the eligibility of the RVO. So organization who themselves become a registered value organization, like ICAI, ICSI, and it's given for them. Rule 13 gives the application how they can apply to IBB and get themselves as a RVO. Rule 14 says the condition for recognition. Rule 15 to 17 gives of the cancellation, suspension in case of there is a fraud or misleading information provided by the registered valuer. Rule 18 says about the valuation standard to be notified by the central government, but currently they have not notified, so we have to follow the valuation standard issued by the ICAI. Next. Yeah. So valuation rule also mention about the fines and penalty. So Rule 20 says that punishment for the contravention without prejudice to any other liability where the person contravenes any provision of this act shall be punishable under section 469 of the Companies Act for 5,000 rupees or 500 per day. Further, he is also punishable for the fine which is not less than 1 lakh or to may extend to 5 lakh rupees. Also, he is punishable under section 488 of the Companies Act, which Sudhakar sir has already mentioned. So, even though he issues a valuation report under valuation rule, but he is ultimately abide by the Companies Act only. So he will be punishable with the under section 448 of the Companies Act as well. Next. Uh, Valuation Rule 2017 also provides some ethical standards which needs to be followed by the valuer. So register valuer must uphold the honesty and objectivity, ensuring their valuation are free from any personal bias. They are required to act as a independently without any influence of the clients. And valuer must protect the privacy of the information shared during the valuation process, ensuring that the sensitive data remains confident. Like when people doing evaluation, they have to disclose the future projection of the company, and also some IPR related detail, some ideas on what ground they are claiming such higher revenue. So register value comes to know a lot many things which are very price sensitive and sensitive otherwise also in the market. So these are the very basic mandatory ethic, like they have to follow that. They don't have to disclose anything to what the data they have received from the company. Transparency and disclosure. Ethical standard requires the valuer to be very transparent in the method and disclose all the factor or relationship that might lead to a conflict of interest. So these are the ethics that provided under the valuation rule 2017, which the register valuer has to follow while performing the valuation. Next. So there are these are the list. I have written down the sections where the act has mentioned that valuation report has to be taken from the registered valuer. So section 62 provides that whenever there is a private placement, preferential allotment, then we'll have to take the valuation report from the registered valuer. So here there is some catch that they have mentioned report to be taken from the registered valuer, but people are taking the report from the merchant banker as well. So merchant banker are not registered valuer. It's a merchant banking is a different provided in the SEBI cat 1, 2, 3. So we have to be careful that whenever do we take a private placement, then we have to take a valuation report from the registered valuer and not from the merchant banker. So question comes when there is a FDI. So FDI, there are two acts that triggers. That's a FEMA and Companies Act. So generally what we do, we take the report from both the entity, from the merchant banker as well as the register valuer. FEMA also mandated that valuation report needs to be taken from the register valuer, but for the safer side, we take two reports. It's a practice what when there is a large amount of FDI coming from foreign countries, that time this practice is being followed. Section 192, when there is a non-cash transaction involving the directors, that time also the asset valuation needs to be done by the valuer. Then valuation is equal for the merger. And 236 talks about the fair value for the minority shareholders buyout. 247, it's a section itself invoking the register valuer, and 281 section says about the asset valuation during the company in winding up.
After one small thing I want to ask. When you said actually you are taking the valuation report from both the valuers in the different acts. So in such a case, what is the valuations ultimately taken? Either higher of the two or averaging of the two or whatever it is?
It should be the higher of one.
Higher of the one.
If one is giving you say 100 rupees, another is giving you 101. So you should go for 101.
Okay.
Otherwise, the department may take it as you have issued at a discount. So it's always better to take at a higher price.
Okay.
Sir, I will interrupt here. Friends, you must have noticed since last few webinars, we are putting in between questions. So it's making everyone to participate and check their knowledge. and then you will share the answer. So it's also self-checking whosoever attending. So please answer the questions which you will see on the screen, which just now appear. It's just for your own self-awareness and knowledge. Yeah, Akshay, go ahead.
Yeah. So under FEMA also for FDI and ODI transaction, we need to take the valuation from the registered valuer. Next slide. Next slide.
I think slide is not moving.
Yeah, there is some.
Yeah, it is.
Yeah.
Yeah, it has come.
So under income tax also, we need a registered valuer report for the valuation of shares for the allotment at a premium under section 56. It's also required when there is a share transfer between two. Section 50CA talks about the unquoted shares. Section 50B, when there is a slum sale where the group of assets is being sold, then for each asset, we need a separate value. We need a valuation report for determining the capital gain. Valuation of indirect transfer of asset. The valuation is also required when there is a transfer pricing transaction, cross-border transaction, or domestic transfer pricing. Also, we need to have a valuation report for some of the transaction. So these are the main acts under which the registered valuer has to provide a valuation certificate for different classes of assets. Next slide. So what is the importance of the valuation? So it gives an accurate valuation which leads to a key financial decision making. It helps for investment clarity as it determines the fair share price and helping investor to access the potential return. Merger acquisition, establish a fair share swap ratio, ensuring the transparency in deals. It also helps for the IPO preparation, because when the company comes with an IPO, that time it's not listed. So that time we have to rely on the pricing from the registered valuer. Taxation compliance for the asset transfer and the calculation of capital gain. Also, the SEBI, RBI, Companies Act, they also mandates the requirement to take the valuation report from the registered valuer. This is the importance of the valuation. Next slide. Yeah. So main critical aspect of the valuation is when we prepare the valuation report. So these are the four area. It's very critical taking the assumptions, because as it's a futuristic thing, you can value a product from, it's a art. So you have to be clear while you take the assumption, what are the market condition, growth rates, financial projection, and those projection has to be a realistic in nature. So those assumptions the registered valuer has to take, because the company gives projection that sales will be today we are at 50 crore and after 5 years company will be at 2000 crore. So then there has to be a realistic projection. So registered valuer has to take a proper assumption while making the report. Then methodology. This also comes into the picture, that which method needs to be applied for issuing the shares or valuing the asset. So that's also depend on the perception of the registered valuer. So we have the registered valuer have to be very alert while doing this. Uh, in report, they have to rely on some external factor which they are also not sure. So they have to mention that they have relied on the external factor. For example, industrial beta. So beta is a risk factor that when we do a DCF valuation method, we have to assume a proper risk which is directly related to market. For example, if there is some information goes into the market, then how it will impact that particular industry. So we assume one beta which is provided by the actuaries or some other service provider. So that is an external factor. We don't have a data how that beta has been arrived. So we have to disclaim that also. And these elements provide the transparency and help stakeholders to clearly understand how the valuation was derived. So this is the critical element while preparing the valuation report. Next. Another a challenge that comes into picture, that often the valuer and we don't receive as a valuer, valuer do not receive the complete data from the client. So there is always some inconsistency in the data, and somewhere we have to rely, the valuer has to rely on those data. Also, there is a regulatory changes which is coming each and every day, so valuer has to be very alert and updated. He has to get updated for the latest amendment that comes. Market is also very volatile, so due to economical instability, geopolitical factor, sudden sectoral change. For example, if government change some say policy with regards to pharma industry, immediately that sectors come down in the exchanges. So that's also need to be taken care when do a valuation. Plus, there is a limited access to comparable data. So there is no robust database which is available. So and also we need to do a peer-to-peer comparison when we do a valuation. Maybe it may be a land asset. So not really ready data is available to do such comparison. So these are the major issues that a valuer faces. Also, he gets the pressure from the client to squeeze the valuation in their favor, conflict of interest. So these are the practical challenges that the register valuer face when doing the valuation. Next. And also there is a special scenarios when the register valuer face. For example, if the person is making investment in say Dubai, China, or Singapore, in another country. So when we do a ODI transaction, then AD banks, your AD bank, authorized dealer bank, has to give the information to the RBI, because on what ground the money is being invested at what price. That time the registered valuer certificate is required to be submitted along with that ODI application. So that time register value faces a problem because he is not aware about the market condition in another country. What will be the exchange ratio? How the exchange currency fluctuation will be there? So these are the key problems are faced when there is a cross-border valuation transaction. Also, the double taxation avoidance agreement is also needs to be taken, because the taxation valuation has the aspect of taxation also. So whatever tax is applied, the valuation changes. So DTAA also needs to be studied properly before doing the valuation of the cross-border transactions. Next slide. So these are the basic methods widely used by the valuer for doing the valuation. It's an income approach. So income approach, the company is being valued from their future cash flows, like uh, what will be the revenue after 5 years, what will be the profitability after 5 years. So on those aspect, the valuation is being done, which is ideal for startups and the software companies, mainly for the startups. Even for the manufacturing also it helps, but in that the fixed asset and all, because manufacturing unit is asset incentive. So there are a combination of methods which requires to be taken for the valuation. Then there is a market approach. So in market approach, if the readily listed entity is available to compare apple to apple comparison, then we take the data from that comparative company, and then the asset or the shares are being valued. And the cost approach. Cost approach is mostly used for the machinery, equipment, land, which Abhishek sir has already explained. So these are the major approaches for the valuation of different kinds of asset. Next.
Ashar, when you
Yeah.
say, when you appoint the two different valuer, if the valuer has got a choice of selecting any one of the approach of the method, or he has to both the things have to select the same method of approach?
No, he has a choice to select any method. It's a perception, like, so he has a choice to select any method.
Okay, so that means each valuer can select their own method and they can submit the valuation.
Yeah. Even for this, even though they take a same valuation method, their assumption may differ.
Bala sir.
Yeah.
While adopting the method of valuation, the valuer also has to justify in detail that why he is using that method. So
okay.
So that becomes a crucial factor in the valuation. So Generally, it has been recommended that income approach has to be used, because it gives the more practical value to the property. If income approach is not applicable, or if the data is not available, then market approach has to be used. And if that is also not available, then cost approach has to be used, or you can also use the combination of approaches.
So that way there is a priority is already set out, some guidelines is there.
Yeah,
That
the
means,
priority
if this
has
is
been
there.
set. Right.
Priority
Okay,
is to
okay.
DCF because the DCF is used widely across the world. So whenever the transaction happens in across the country, people use a discounted cash flow method for the valuation.
Yeah, that is what I also seen, and mostly many of the companies, the DCF method is being used.
Yeah,
Yeah.
DCF is a widely accepted method.
Yeah.
Yeah. So this here we are discussing the key assumption that require for different kind of approach. So if we take the income approach, so main in income approach, the main criteria is a future cash flow. So reliable forecast of revenue, cost and profits that needs to be considered. Then the discounting rate, what we select to bring the future profit into present. So discounting rate plays a very crucial role, and the growth rate. So growth rate is a perpetuity. Like as we prepare a projection, we prepare a projection for say 5 years, 6 years, maybe 10 years. But the company will run forever. So there is a perpetuity assumption that we need to take while doing the income approach. And then the company is valued. So growth rate also plays a very crucial role while deciding the company's value. Market approach is yeah, Abhishek, sir, you want to add anything?
Yes. What do you call that after calculating CAPM? What do you calculate in? What is your discounting factor called as?
WACC, weighted average cost of capital.
Yeah, right. Weighted average cost of capital, in which you consider the beta risk factor and
Beta, the free
CAPM model you
risk-free
calculate the
market rate. Yeah.
right. So some of the quotes are against market approach, income approach, because according to them, they say that even if all the data is same, but your weighted average cost of capital, that is the discounting factor, if you vary it even by 1%, your value may change by hundreds of
Change
crores.
drastically.
So some of the quotes are against income approach, but you have to adopt the method accordingly by considering to whom you are submitting the report. So you have to be aware of all the market scenarios, that whether this method will be acceptable to whom you are submitting the report.
Yeah. Yeah, so in market approach, we select the similar kind of company, listed company or maybe unlisted company. Then we have to select the various parameters of PE, maybe enterprise value to their EBITDA or enterprise value to their sales, and in some percentage form, and then how the valuation is derived. In cost approach, it's a current cost or the replacement cost. So it's like if I'm valuing some machinery, then I will compare the same machinery as a new machinery, what is the cost, and then the second hand at what the cost is coming to, and this kind of combination is being used while valuing the asset on the cost basis. Next slide. Yeah, so valuation for the insolvency resolution. So under the insolvency and bankruptcy code, the register valuer assess the fair value and liquidation value for the distressed asset which are critical for the resolution plan. Uh, Accurate valuation has the resolution professional deciding between the restructuring the company or proceeding with the liquidation. It ensures the creditors receive the fair competition. So key consideration here is financial health. The valuer has to analyze the company's financial stability, debt structure, then the market condition of the asset which are under the insolvency, and valuer has to play a very crucial role in maintaining the transparency. Deepti ma'am, would you like to add anything to this?
So actually in IBC, the valuation play a very crucial role, because at this juncture, the company has an asset. Here the concept, after honestly IBC, the valuer and valuation is given lot of stress, importance. Earlier it was there, but you can say the guidance and awareness about the valuation. Because in IBC, as I was mentioning, entire assets and sometimes entire company value, because the company need to be sold as a going concern. So when the bidding is required, what should be the minimum reserve price? It's a very crucial thing, and the business gets sold. So all kind of assets is get valued, including deposits, and it's so much that time, which asset should be valued as asset, whether it is asset or not. That itself is a question one has to decide. So it has a very complex scenario and such a crucial, because entire revival is based on that valuation. That once that is crystallized, then the level of applicant will be decided, because if the valuation high, not everyone can come, and based on that valuation only company got sold as a going concern. So there it has different valuation as a going concern, fair market value, distress, and the liquidation value. All are different. In liquidation, the value get reduced because the company is closed, and company not necessarily always closed. Liquidation under going concern can be there, but in liquidation, valuation goes because it's that resolution process has failed. So it has a complex thing, and as I said, valuation has very important role in IBC success of it. Thanks.
Yeah. Okay. Next slide. Yeah, so we'll discuss some case related to how the valuation work for different kind of companies. So, for example, we are valuing a startup company or a negative valuation startup companies. So, startup company initially they don't have a profitability for even 2, 3, 4 years, but still they are valued at a higher valuation like 200 crore, 300 crore. So, what are the main drivers in that? So, startups are early, especially early stage, often have a little or no revenue, making it difficult for standard valuation method. So, when the company do a valuation, when the investor do a valuation, they give a revenue multiple to them, or they see a projected cash flow. Accordingly, they give the valuation. For example, if company is current revenue is say 50 crore, and they are projecting it as a 500 crore in next 5 years. So the investor will give the revenue multiple to the valuations. He will give a value, say multiple of 5 or 10. So now the company will be valued either at 250 crore or 500 crore. Because the company's profitability at the initial stage is very low or negative, even the EBITDA will be negative. So that time how the companies are valued. So the investors give the revenue multiples to them. Then they also see the projected cash flow. Sometimes they give the multiple to EBITDA. Say revenue multiple is 5, they give 15 multiple to EBITDA. So, and if the startup is at a very matured level, say they are generating revenue and some profit, so then the investor will take the profit as a lever to take the decision for the investment. So this is how the mostly startups are valued between either on the revenue multiple or EBITDA multiple or the PAT multiple. So that's how the startups are valued, and the key value that they take into consideration market potential. How big the opportunity is? Can startup capture a significant market share? If you take the example of Swiggy, so even though they were incurring a losses, still date also they are incurring a losses, but the investor are ready to invest because they can see the market opportunity. Even a single day they can convert this company into a profitable, because they have a large customer base. Intellectual property, if the startup has developed some, say, patent or some IP which has a very tremendous value, so they give the value to intellectual property also. That time they don't see a revenue multiple. The revenue, of course, that will be generated from the IP itself, but they also consider the life of the IP and the growth perspective. What's the trend in the market and how the growth will, what growth the valuer has taken. So all these are the major consideration while valuing the startups. Next. So valuation in M&A deal. So valuation in M&A deal, the valuation determines the fair share ratios in the merging and acquisition, ensuring the balanced deal for both the parties. It also helps the right purchase price and smooth negotiation, avoiding the dispute. Because if there is an imbalance or wrong valuation given to another company who is getting merged, then in swap ratio they will have to issue extra shares to them. So it plays a very crucial role to come across the accurate price of the company. So key factors to be considered then: overall net worth assessment, future cash flow and profitability after merging or after spin-off, what will be the synergy. If, for example, company has some loss-making entity, they just spin it off, like they remove it from their structure. Then what will be the future prospect of the existing company, and accordingly the share swap will take place. It also says the market comparisons, like benchmark with similar companies deal. Like if Vodafone and Idea is got merged, at what ratio, what was the pricing band. Then if Airtel and Jio some get proposal to get merged, then the valuer will see this deal as well. So sometimes what happens is, if there is some immediate deal has happened, then valuer can take the basis of those deal, and then they can value the company. So valuation plays very crucial role in merger and acquisition also, to which ensure the transparency, fairness among the stakeholder, and provide the proper worth to both the company shareholder in case of mergers. Next slide. Valuation also required for the corporate restructuring. So the corporate restructuring purpose is to essential for the debt restructuring, merger, demerger, spinning off of the to assess the value of the different business segments. It ensures a fair treatment for all the stakeholders, accurately valuing the assets and liability. A valuer's report plays a very supports decision making for strategic realignment, helping companies and optimize their structure for the future growth. So here also valuation plays a very important role when you restructure the company. For example, there is a group of company having say 15 to 20 group companies in that. Some are loss making company, some are profit making companies, some are cash generating unit according to accounting standards. That time, it's a when the holding company wants to reduce the number of companies and get merger and acquisition. So this restructuring requires a very uh, complex valuations, because each company will have a cross holding within the group. So there has to be a proper valuation needs to be done to give the treatment to other minority shareholders. So valuation plays very important role in this as well. For the IPO, the company which are coming for the IPO, so issue price is decided before the opening of the IPO, and the market value is not available. So it also give a proper pricing to a new shareholders. They can also refer the valuation report, and proper valuation report helps ensuring the transparency, and it creates the investor confidence. In Paytm IPO, detailed valuation report was critical in explaining and supporting the share price, providing the clarity to potential investor, because the IPO was open at a higher price, and very few days the price started reducing. So whatever the legal action or investigation happened, that time the valuation report played a very crucial role, that on what ground, what assumption the price was decided and kept at 600 or something. So it played a very important role in valuation. Next slide. Yeah. So accountability and the disciplinary authority for the registered valuer. So IBBI is the ultimate authority. So Insolvency and Bankruptcy Board of India is a primary authority under Section 247 of the Companies Act, can suspend, cancel the registration of or the misconduct. The RVOs, the registered valuer organization, needs to monitor their members, and they can also take the they can also initiate the disciplinary action proceeding against them. These professional bodies can take action against the member if they found violation for their code of conduct. ROC can also initiate the penalty for non-compliance under the Companies Act. But the final authority for any suspension, cancellation, honorary legal action needs to be taken, then the IBBI is a final authority to take the decision.
Here I will add, Aksar, that please, friends, it's now RBBI is very vigilant, and the valuer has faced lot of hits, and there are many decided cases where they have put a very harsh penalty on the registered valuer. And as you know, this, as it is explained earlier, it is very subjective and it's an estimate. So valuer has to keep a proper documentation, otherwise they will face the hit of this, inspection, questionnaire, and punishment. And they have to be very vigilant. Yeah, thanks.
Yeah. So next slide is on the action taken against the registered valuer in one of the case. So in NACL case, that commodity exchange, that some financial mismanagement happened in July 2013. So registered valuer held responsible for assessing and verifying the value of commodities stored in the NACL warehouse. Accurate valuation were essential for ensuring the legitimate trading of activities of the exchange. So how the register valuer failed? The register valuer failed to conduct thorough assessment, and which leads inflated falsified valuation. Many warehouses were not found or found empty or holding very less stock than what it was mentioned in the books, and which exposes serious lapse in the verification. An incorrect valuation allowed NACL to misrepresent the assets and enabling illegal trading practices, and investor lost their 5,600 crore, and the exchange got suspended immediately when it came out. So the it is a unethical practice taken place by the valuer. There was no professional code of conduct. There was no any rule which were leading the valuation at that time. So it leads to ultimately a value. Because of all this activity, the government finally came out with the proper register valuation rules, where they have to follow some code of conduct procedures to value the company's value worth of the assets. So this is one of the biggest thing happened in because of the valuations. Next. Also, the in Syngenta India Limited case, the they have proposed a selective capital reduction under Section 66 of the Companies Act. The NCLT held up the reduction, emphasizing the importance of the register valuers report to justify the fair price. So the valuers report was a very critical role that played to get the approval and to pass the order. So this highlights how the proper unbiased valuation can ensure the fair treatment of the shareholder and support. So registered valuers report was very critical in this decision making. Another case studies between the Union of India versus Deloitte. So SFIO, it's a serious fraud investigation office, found that the auditor provided incorrect financial assessment, which leads to an inflated valuation in case of the ILFS. So because of the Deloitte's financial report, which was already inflated, and the decisions and all the valuation was inflated, and investment was made on those price, ultimately ended up with a fraud case, and charges was filed under section 447 and section 140 subsection 5, leading to restriction on the auditor's practice. So these are the action taken against the Deloitte and the register valuer as well. So this case underscores that the improper valuation leads to misrepresentation, and which could lead to several legal consequences, including fine, professional bans, and further investigation by the agencies like SFIO. So here in these two cases also it plays a very crucial role for the valuation report. Next. So understanding the valuation of the intangible asset. So it's very difficult to value an intangible asset unless and until valuer have a proper knowledge about those intellectual properties, patent, or it may be a software. So, what are the intangible assets? So, assets like brand value, intellectual property, patent, goodwill that do not have a physical form but hold significant value due to the future benefit of the intellectual rights. So, the valuer has to be very alert. Recently, Parle took over the Bisleri. So, the plant and machinery which Bisleri is having maybe around 200 crore, but it got sold at a much more higher price. So there was a brand value which was there. So they must have taken the valuation report to justify the price. Why the valuation of intangible is different? So unlike physical asset, intangible derives their value from the future income potential, brand reputation, or exclusive rights requiring specialized techniques to determine their worth. So if you are holding some patent or some IP, then you only have a right to use that. So it gives you a potential to earn the income in future. So on those basis, the intangible assets are being valued. Even though in that also the revenue comes from the intellectual property. So the method which is used is DCF only, by which the projection is generated based on the intangible asset, and then we have to discount them to bring it to a present value. There is a royalty relief method also being used for asset or cost approach. Even if they themselves develop the same intangible asset, it may take a 1 year or 2 year, then they take the estimate that even if we start creating this asset, it will cost us 2 crore. You have already made it at 2 crore. So they will pay some premium, but the cost approach is also being used while valuing some intellectual property, in which a brand value and goodwill cannot be measured in that way. So intangible asset plays very essential for the merger, acquisition, license deals, and financial reporting to ensure the fair price, transparency, and strategic decision making. Accurate valuation helps in understanding the true economical value of the asset. So Abhishek sir, would you like to give some lights on this intangible assets valuation?
Not much, because it is quite complex and cannot be explained in it ha there are 18 hours or 24 hours classes for the intangible assets valuation. Just hold on. Yeah, so mainly intangible assets. You have to check the projections. Say, for example, software. I gave an example of software some time back, right?
Yeah.
That what is the utility to the purchaser? That depends. In case of arts, gold and silver can be valued because we have the real-time market data for those things. But there is another intangible assets which we have come across as a land and building value, that is lands, quarries and mines. Okay, those come under intangible assets, and you have to get the volume of that. Say, if you are valuing a mine of bauxite, so you have to get the data of bauxite which probably exists below that land which you have got. And how much quantity of bauxite you can extract out of that land? You have to clean that bauxite, or say chromium, and what are the sell proceedings to get that property into sellable condition. And also you have to consider time value of money. So every intangible assets is valued by different methods. So
like DR will be there, development rights, trademark, copyright, patent.
Yeah, those are also major intangible assets. While valuing, say, for example, if you have a logo of Tanishq, which is a jewelry brand, so if this is one product and this is one product, both are giving the same utility. And if you have Tanishq brand on one product, that logo is embossed on one product. In that case, one product is being sold at say 1 lakh rupee, and one other product with Tanishq brand is being sold at 1,20,000. So 20,000 is considered as the brand value, or the value of that logo, and accordingly so after attaching that brand or the logo on that similar asset, how much is the difference in revenue you can generate? Accordingly, the intangible assets are valued. So every intangible asset has different method of valuation. So we might take some separate presentation on that.
Dipti, whenever the company shows the goodwill, how will you actually look at the goodwill and this valuation?
Yeah, Mr. Abhishek.
Yeah, so In case of goodwill, it works on similar lines. So I don't know. You are from, sir, Bala sir?
I am simply a company secretary.
No, and you are from which place?
Pune.
Oh, Pune. I'm also sitting in Pune. So if you
Okay.
have come across Chitale Bandhu Mithai Wale,
Yes.
it's a sweet mart. So or P.N. Gadgil Jewelers, who is a very famous jeweler in Pune. They have expanded across India and abroad as well, right? They have recently launched their IPO as well. So I stay in Kothurud area in Pune. There are three shops just beside my office. One is P.N. Gadgil Jewelers, another is Ashtekar Jewelers, and beside that there is some another jeweler. So, at the time of Akshay Tritiya or Dashera, you will find all the pandals out of P.N. Gadgil Jewelers. There is long queue, and people wait outside their shop, say for 2 and 3 hours. And just beside that, the other two jewelers are welcoming, and there is no queue of even 3 to 4 people outside their shops. So gold, if it is hallmark registered, all are same golds, irrespective of from where you are buying that gold. But still, that goodwill of PN Guardgate gives entirely different scenario to the company itself.
Yeah, sure.
Yeah. So next slide. So in conclusion, the what the register valuer plays a role in whole the industry is they deliver the accurate and transparent valuation for the fair transaction, and which is essential in maintaining the market integrity across the investment and the mergers and the acquisitions. They build the trust among the investor, creditors, and the stakeholders, ensure the efficiency and compliance with the regulatory standards. They also uphold the ethical practice and similar comparative practice so that it becomes all the report becomes more reliable and efficient for the valuation. And because of this regulatory framework, it will increase the growth confidence in the financial ecosystem and ensure the market thrives with the fairness and transparency. So that's how the register valuer plays a very crucial role in the corporate industries in all the different kind of transactions. So here it's and we are ending this uh, discussion. Thank you. So we can go with the question answers.
Yeah, we will go that. But before that, Dipti, after listening large, I think there is a very good opportunity for our young company professional to become a registered valuer. Because
Yeah.
especially running in the Companies Act and the SEBI and ODR regulations and RBI, company secretaries are being a corporate professional. And I think there is a very good opportunity. I can actually look at it today. But at the same time, there are a lot of things which they'll have to master the art. That means in terms of the assumption, in terms of the various things to be considered and various aspects to be taken, etc., etc. It seems to be a large extent to putting an effort to become a registered valuer. That's what I could say. While there's an opportunity exists, there are a lot of work will be involved in this. Dipti,
Yeah.
according to you, how many company secretaries are actually known to you as a registered valuer?
Many are there. My own partner in IP entity is a registered valuer.
Okay.
And Akshar is also appearing. He is also CA. And you can practice both the profession. CS also and as a valuer also.
Okay, okay.
Many are there, but it is honestly tough exam. And after that, to practice it is also is a lot of your inputs, study, and experience, and require.
No, after listening to you, I can make it out. It's not a thing. It's going to be a marathon task, actually.
Yeah.
Because you need a lot of efforts. You need a lot of things to put in. That's what it looks like. Yeah.
But CS are less as compared to CA. More CA are valuer. Very few CS are valuer.
Okay, let us look into the questions quickly.
Please. Yeah, please.
Yeah. Let me start with the first question. Is this registration and qualification required only for releasing the technical valuation report of HFCs, also for evaluating the time for SURFACE and before the action of properties?
Where are you able to see the questions?
Even I am not able to see.
The very first question is appearing.
No,
The very first question starts with that only. Is the register?
can we?
Should I click so that I can see the questions?
No, it's okay. Chat only. First question was, can we become a registered valuer along with CA practice? Fine, you can do. Akshay, you can stop sharing.
Yeah. Okay.
Then next question is, the first question, can we become registered valuer along with CA practice? Yes, you can. Is this registration? You can go to Mr. Abhishek in chat box. It is there.
Yeah. Is this registration?
I'm able to see the questions now.
Yeah. Is this registration and qualification required only for relating to the technical valuation report for HFCs and also for the valuation at the time of a SURFACE and before action of properties?
SURFACE Act 2002 mainly says that a registered valuer who is registered under Wealth Tax Act 1956 under Income Tax Department, only those can be those are able to value the assets under SURFACE Act. So it is purely for auction purpose and banking purpose. So registered valuer who is registered under IBC or IBBI cannot value those assets under SURFACE.
Yeah.
What is the frequency to value? What is the frequency to value the assets of the company for asset as well as bond, share, etc.?
As per the requirement and the necessity of company, they get it valued. But the recent law, you CS and CAs might be aware that the companies more than 500 crores are required to value their entire balance sheet of the company every year. And
is it mandatory? It is mandatory. Is it mandatory for value the assets of the bond, shares?
It is suggested. Okay.
No. I think when it comes to the investment activities, the perfect preparation of the financial statement, it is a must for every year because the disclosure is going to be made.
Correct.
So it is going to be a yearly activity, especially when it comes to the investment under the Companies Act. The word value is itself is misnomer. Somebody is actually saying, what is the purpose? What is the purpose? Value is itself is a misnomer.
No, it's a expression of his opinion. No, not
okay. Not the question. What is the purpose of appointing two valuer from the same purposes? I think we discussed this elaborately. We asked about the two valuer. Okay. And the IBC, is it compulsory to appoint the two valuer or average of the two valuation? The intention may be get the better valuation and to avoid dependency on any one of the valuer who can be biased.
This is my answer to that earlier question, Mr. Bala.
Okay. But what will give you a lot of subjectivity of the value can adopt any method as per the whims. Market approach or adapted to what types of the assets. No, that also you said, no, it's all depends upon it's entirely with the valuer. And again, the
he has to justify in his valuation report why he has adopted that method and how that method is correct.
Yeah. Which method is adopted valuing the immovable property, especially in case where that has been offered as security for loans?
Market approach is used mainly.
Sir, after clearing the examination of the registered valuer, from where 50 hours training is taken?
From various RVOs that Akshar has already mentioned, ICAI, IOV, RVF.
It's a prior to the examination. Like first you have to take the 50 hours training and then you have to appear for the exam.
Okay, first the training and then exam.
Then it's exam.
Yeah. Okay. Whether CS in employment can take a valuer examination?
It can take, but it cannot practice.
Yeah, if you are in employment, you cannot practice. That you have to choose. Yeah. After clearing the examination of the registered valuer, that we have taken the same question. Can you organize once you issue further shares of the private or at a normal value? Can it do so? Or CR or valuation of the compulsory for optional for it?
Valuation is mandatory.
Valuation is mandatory.
Yeah. Even if it's after a second subsequent, for example, when you do ODI investment in foreign company, when you incorporate your subsidiary company there. So when we make a first investment there, then it's a price which is mentioned in the MOA. And then when you do a subsequent investment there, maybe after 2 months or 3 months, the valuation report is immediately required. So it's the same in India also, when when the subscriber has subscribed the shares, and after incorporation, if we do a private placement, even at a face value, then also the valuation report is required.
Dipti, there is a suggestion has come to you. Can you organize the interaction section for the Forensic and Fraud Investigation and the Data Protection Act also? That is a suggestion which actually has come.
It's a big topic.
I think with this, the questions or the chat box are over. If anybody wants to write their question, they can write the question. We can take up the questions. Any participants would like to ask any questions, please raise their hands so that we can permit you to speak.
I think no one is there.
No one is there, I think so.
Yeah. Just I want to declare one thing, friends. Next week is a Diwali. So we are not having our Saturday webinar. And after that, ICICI National Convention is there. So that Saturday also we are not having our Saturday webinar. So after 2 Saturdays, we will be back again for our regular webinar. And for that, thanks for everyone for being participating today's webinar. Thanks, Mr. Abhishek. Thanks, Akshar. Thanks for sharing your practical experience, knowledge. All participants really get helpful. It was really insight into actual application of mine and how it can be done practically. Thanks a lot for your guidance. Thanks, everyone. Thanks, Mr. Bala. Thanks, Sudhakarji. Thanks, Akshar. Wonderful presentation. Thanks, everyone, for participating. Wish you all very much happy Diwali and happy and prosperous New Year ahead. Thanks at all.
Thanks a lot. Thanks a lot to Akshar and Abhishek. Happy Diwali to you all. Let us celebrate the Diwali and meet after 2 weeks. Thanks a lot. Thank you so much. Thank you.
Thank you.